All right, you guys. So I just want to run through, some of the history that's going on here with the market and some things that you guys can take note of for yourself, so you can see, how markets respond. What's going on with this big rally this week, and that kind of stuff. So all I did, it's real simple. You just go to Trading View, you hit, type in SPY, and then you can see the history. The SPY started as all the way back here. But so this is a little history. So it's just a very simple chart. This isn't going deep, but I just want to show you a few things that are really obvious right now. So here's your top, right? You got this double top. That's nice. Everybody's happy, right? Now you started to see the selling come in. Okay, and what happened? Well, the selling comes in, and it takes you down, in this case, 28%. These are these long wick candles, and this is a weekly chart. So for about a month, you were getting this kind of selling and buying. A lot of volatility in here. Okay, so that's something to pay attention to because we've had a lot of volatility lately. And so it came down. You saw the rally, and then we sold off more. So that was 28% in this case. Okay, super easy. Now, what I want you to see is this area here, right? So let me just see if I can make it more visible. See if that helps. Okay. So then, okay, they sold off 28%, and then what happened? Well, you got this rally. You got this move back upwards. So we're looking at this part right here, right? Comes down. This is about a month-long period, kind of makes its way up. Okay, and look. All right, so that's that move. That's that little move right there. Okay, so then I just want to take note of the percentage, right? And this is just approximate, just to give you an idea. So that's about 18% if you exclude this big wick, right? But this is where people get excited, so maybe I should include that. So that's 20% up in this case, okay? So back in the day, this is what you had, okay? 28% down, 20% recovery. Now check it out. What happens next? This is what happens next. Breaks, boom, boom, boom. Whoa, okay? So that is one pattern. That's something to take note of. So you're seeing this 20% recovery, comes back down, dips below, so on and so forth. But let's look at let's look at the monthly to see how many months that took place. Oops. So how many months was this move? Okay, so from beginning, if we start it, let's say we'll start it here. How long was that move? 760 days, okay? So you had 760 days for this move from top to bottom, okay? So what is that, about 2 years? Okay, so let's put a little marker there. So assuming that history kind of repeats itself, right now, looking at our market, which I'll show you in a bit here, you're at this phase, okay? You're at this kind of recovery rally, what could end up being a bear market rally. Okay, so let's just move on and see what else is out there. See what's next. Okay, so you come over here. This is 2008, real straightforward. All right, I'm gonna put a marker here so we can see the top, which probably looks like right about there. So in this case, we have the top, looks like October 07, right? So this kind of interesting because it's taken a little bit longer, right? We had this topping pattern, this consolidation, everything was good. People were feeling good. all the way up until around here. This is where they start to get worried, right? So this is August, okay? So what I want you to see on this one is if we go top to bottom, okay? Now let's take that line here. This was a more drastic one, huh? So here we go. Sorry, it's taking me a second here. But so anyway, just look at that. There you go. You've got about, let's say, on the monthly, from top to bottom, you're looking at about 22%. So on the one back here, you're at, you had a steeper sell-off, that 28%. On this one, you've got 22%. You see me? So what happens, which is interesting here, is you have the bounce, and look at the bounce. In this case, it's about 13%, okay? So this bounce was much better, right? But you got this 13% bounce, and this is very approximate, right? So I'm not trying to dial in. I'm just showing you a macro concept. So same thing happened here. You sold off about 20%, and then in this case, you bounced about 13%. And then look what happens. Okay. So you had your, this little recovery. This is on the monthly. I'll put it on the weekly. Let's do it like that for this little part here. All right, so let's put it on the weekly. And so you are here, right? And so on the weekly, what do you got? 1, 2, 3, 4, 5, 6, about a month, 6 weeks, and you get this 15% recovery. And then, whoa, this was nasty, 2008. Uh-oh. People really, really freaked out. Look at that gap down. Uh-oh. But in both cases, what happened? You see me? What happened? Uh-oh. It broke the lower lows. So we went all the way, the total move of both of these, which is, you guys, the basic theory, it's going to come in around 50%. There you go. You got 55% on that one, right? And on this one, 50%. See, Dow correction is 50%. So there you go. You got your sell-off now. So this is 2008. So where are we today? Well, one of the things that's so crazy about where we are today is look at the bubble, but I'm not going to get into that. I just want to show you these three concepts here. Right? Because they're all patterns. And so here we go. Top to bottom, about 23% right now. This is the chart we're trading right now, right? Now look at where you are today. Okay, this is where you are today. Monday morning, market opens. So right now you're only up 12.9%, right? And then the 2008, you went up 13% approximately. So historically, just roughly on that pattern. There you go. The other one, you had a recovery rally of 20%, right? So that might bring you up to somewhere like here. Okay, but this is where you are today. This is where you're at right now. Okay. So this move, based on history, kind of looks like this, right? So this is why I was pointing out, is that you're setting up this awesome bull trap right here, right? It's perfect. And so anyway, so then you can come up. So over the next week, what might you see? You just heard the word recession for the first time, right? It's been confirmed. What might you see? Something like this? Something in this zone, right? Something like that. So you're going to see upside on the market for maybe about 10 days to 2 weeks based on history. So then what happens next? Well, and I talked about this. I've been talking about this for 2 years. 2 years I've been talking about this. All right. So here you go. This is going to be about 50%. I'm going to show you one other really important trend line. Okay. So 54%. So from where you're at today, the basic correction would put you, let's just keep it nice and even, right around here. Not quite at the COVID lows, but back here, and your cost of stock, what people are paying, would be below what they paid in 2020. This was running up into COVID, and then here's the COVID crash, right? So we don't know how it's going to look, right, coming down, but based on these historical patterns, what you can see is they all kind of look the same. You got your 20% down, in this case 12% up, you had 48% down, and then you had 20% up. And then just to bring it full circle, look right here. So look at the time period. This is what we're talking about, so you guys fully understand. From here, from top to bottom, was 2 years. Okay, let's look at this other one, just so you have a basic idea of the time frame. So you're at top to bottom, 518 days. So that's about, what, like 18 months? You know, this was a longer, right? So from here, where you're at today, just so you guys have basic common sense knowledge at this point, this is all it is, it's just common sense knowledge. You're like, well, how long is this going to last? So from here, let's go out. Let's take the short version. Okay, the short version puts you at, oops, that's 588 days. Okay, so that gets you to August of 23. That would be next year, right? Okay, super simple. So then you got the other version. Let's look at the other version, which is, let's see, $763 days. So let's see where that goes. 700 and let's say 770. That's close enough. So that gets you to February of 2024. All right. So this move that you guys are in right now, historically, at the very least, what just began historically, will take you all the way through to next summer and or the spring of 2024. So anyway, I hope that helps to put some stuff into reference for you as far as like the time frames and what it looks like. And this is why I've been talking about it so much, trying to explain what happens to a business, what happens to just ordinary people who they don't know any of this stuff, right? So anyway, guys, I hope it helps, and keep on keeping on.